Hey guys, today is Sunday, February the 20th of 2022, and I want to go over crude oil using WGAN price and time, technical analysis. It has been a market that has been requested, and there's a lot going on in this market. I want to go ahead and cover it, and just want to start off that there are a lot of unknowns happening, even as I speak, in regards to Russia and Ukraine. Is he going to invade? Is he just bluffing? We don't know, and that's what's causing the uncertainty. And markets, as everyone says, they don't like uncertainty. Here's a map here of a possible axis of invasion. Who knows if this is going to happen? So just wanted to put this out on front and just say that if something does happen, it's going to affect the forecast, it's going to affect the analysis. Anything could just happen. Everything, the volatility would increase and the unknown will kick in. You don't know what's going to happen, panic, and it affects all of us, the markets, the forecast cycles, everything. So, and I've always said it in my channel, at the end of the day, price is king and it's going to do whatever it's going to do. It's going to ignore everything else and it's going to do what it's going to do. So with that being said, let's get into the charts. Okay, we're going to start off with our cycle. And the one that is the most important right now will be the 269 cycle. Mind you, this is a weekly chart. You can see the 2020 flush. And it pretty much is following the pattern. As you can see right now, we're beginning to top out. It somewhat tops out somewhere around May, maybe the first week of May, last week of April. And then the cycle goes down into October. But this all could change. And one thing I want to say, just because it's topping out here and it's pointing down, doesn't mean that crude oil is going to turn here and it's going to start going down. It could, like you see here. Here it just topped out and it started pointing down and it went down, but then it just kind of went sideways and then it went for pretty much a whole year sideways. And then it flushed down. It's going to take a while if the cycles are going to play out. And like I said, with the Ukraine situation in Russia, all this could just go out the window. Crude could just probably explode even higher. Okay, this next slide I got, chart, whatever you want to call it. This is the daily crude oil futures. The last one I showed you on the weekly was the same thing, crude oil futures. There's three cycles that jump out at me. I'm going to go with the higher ones first and work my way down. The first one is the 382 cycle, which is this one right here. You can see that it bottoms out late. We made a low here, then it's going down, and you can see that crude oil didn't go down, just continued chucking along higher. We made a low here, so that was a nice little buying opportunity when it came down here, because now the cycles are going up. And these top out somewhere around June of this year. So that's the 382. The next one that comes out is the 260. And you can see the same fluctuations. And this one tops out in May 2022. Then there's a shorter one that comes out, which is the 170. And now it bottomed out here and it tops out somewhere around April. There's a 103, but I don't like getting lower and I sing threes. So I just have those three as important. We'll start out with the 382 cycle here and merge that with the 260, make a composite. And this is what we got. Bottoms out here, and now it pushes it in, May, same thing. If you add the 170, this is the same thing you get, May. Do the shorter one, 103, it gets a little more wiggly. Take out the 382, have just the 260 and the 170. And pretty much April, May, June is the months you want to keep an eye on, just using these cycle analysis. So using our Fib Grid chart, I would keep an eye on 103.89 and also 126.88. key levels to watch using the FIP grid. Okay, so this is my simple glance chart, and we'll start off with the weekly. As you can see in the weekly, the linear regression channels are pointing up, so that is good. You're above the 20, the 50, the 200, and the 100, somewhere around there. You are above the cloud, which is good, and the cloud is forecasting positive. We had Tom D mark, we had a 13, and we had a 9th candle, sequential candle. And you can see that then the next week, we got a little skinny. These are Hakanashi candles. And that was just showing that maybe there might be a swing to the downside, and we got it. But what helped out was the Tom D mark sequential number count, 13s and 9s, which lately I've been seeing that. I've never seen that before in a while, in a long time. I normally used to see 13s separate from the 9s, and these are like all bunched up. Just kind of telling me that maybe that's a new thing that's happening in the market, a new, as I would say, anomaly. You guys seen the video I posted on my Twitter feed? You'll understand why. That's going to be a new word I want to start using. Anomalies. These are little anomalies. So we have another anomaly here. Tom D mark 9th just popped up. Will this play out right here? All this going down? I don't know. We'll see. If you get that candle like that here this week, you could probably play it out and put a stop loss on the top. But like I said, there's a lot of stuff going on with Ukraine and the with Russia. That's going to be your unknown. That if something happens, this thing could just explode higher. Another thing I want to show you on the weekly is that on the market profile, the value area high is like 98.04. And I had to go back 15 years in the back to find out where this value area high is. 15 years from 2022, which is right there. And it's at the top of the range. So, if it would pull back, yeah, it could pull back, find support at the 20, the 50, this linear regression channel right here. But, it could also explode up if somebody drops a bomb, somewhere and the war starts or the invasion, So those are the things you want to keep an eye on. Let's go into the daily chart. You can see that we hit a pivot, R1 right here of 95.44. We got a PPS sell signal. It's kind of red, kind of floating around, hovering around the 20. You're above the 50. You're above the 100. You're above the 200. Linear regression is pointing up. Cloud is beautiful, nice and thick and wide, going up. And Friday's volume was very positive. Last week's volume was negative, but Friday's was positive. Some people are saying once the Olympic is over, things are going to start rock and rolling. So I wouldn't short here yet. I will probably wait to see this candle on the weekly to maybe consider it as maybe a nice little, swing play, or maybe a scalp to the 20. I don't know, like here. You could get down here, or at least to this support right here, 84, if that's going to play out, and just put a stop and just trail it really tight, because I don't know what's going to happen in Ukraine. But on the daily chart, everything is looking good. You're above the cloud. There's nothing negative here, although this looks like it's about to turn. But we'll see. But those are the things I'm seeing on the simple glance chart. Before I go into my master chart, I want to share this chart that I've been using as of late, and I find it very fascinating. And I call it the midpoint because I kind of did a composite or a mashup of Michael S. Jenkins' technique. And I call this chart the midpoint chart. Pretty much, what it does is that it takes the previous week's range and plots out the 50%, the top, and then some extensions. And I have it for the weekly, the monthly, the yearly's up here, the monthly's over here, the weekly, and then the daily. And what I do is, on the yearly, I plot out the daily chart. I kind of see the key levels. And then on the monthly, I plot out the 1 hour. And the weekly, I plot out the 30-minute. And then on the daily, I plot out the 5 minutes. So I'm actually seeing all the, what I call fractal levels, the 5 minutes, the 30, the 1 hour, and the daily within a bigger time set of indicators. I can see the big picture on how we are. And then when it's green, it indicates that you're above the midpoint, the previous range midpoint from the monthly, the weekly, and the daily. So what strikes out and jumps out at me is that on the yearly, this is a pivot point, which is 94.97. And then this is the high of the last year, or the previous high of the range, which would be somewhere around here, I guess, at 85, 2001. Yep. So that's the theory. So this white line is the top. And if we're going to push higher, another key level you want to keep an eye on, because this is like big time frame picture key levels. This is not like little ones like here, is that 104.53 is the one you want to keep an eye on if we ever get up there. If we get up there and it kind of stalls out and, things are lining up with the cycles, everything, there's clusters of events that maybe it tops out here, then, that could be another scenario. And you can see that right here. Now this is resistance because we're below the previous weekly 50% range, which is 91.66. So we're going to have to, deal with that. And you're above on the daily. So those are the things I wanted to show you on the, what I call the midpoint chart, which I've been using lately and I'm really liking it. So this is my master chart. And now it looks crazy, right? I figure I just showed you this. The data I have is crude oil, cash close. I don't have access to futures. Kind of hard for me to get futures, period. So I have to go other routes, and I got a cash close going way back to 1977, somewhere around there. It probably went even further out, but it was very, the data was very dirty, sporadic. So, this is the best I could work with, and I'm going to just work with this chart and just kind of do my analysis on crude. But I just wanted to show you the years. These are all years, from different swing points. And Gann always said to use, the 60, the 30, the 20, the 15, the 10 year. He mentions the 7 year, which would be like a bearish year. There's a 5 year. 3 years and a 1 year. The smallest I think is the 1 year cycle. But these are big picture cycles, and I'm going to clean this up. I just wanted to show you that this is how I start my analysis, using time frames and using yearly projections, and just kind of just see what crude oil has done in the past. How long does it take? How many years for a swing, and just see if it pans out using Gann's theory. As you can see, there's a 10 year. 7 year. There's a 7 year right here, which is kind of inverse because you would think the 7 year it will be from like a top and then going down. And here it just proves that the 7 year, and it's not exactly. I'm not going to say that all this is just to the day and to the dot, to the year precisely 7, but it's roughly. You can see that here it just kind of exploded to the upside from this swing low to the swing low right here. But let's get into it. I'm going to clean this up. I just wanted to show you. This is the first thing I do when I get data, and I want to get an understanding of how this crude oil moves around within, the yearly time frame. So this is big picture stuff. You just kind of get an understanding, and then I'm going to clean this up, and we'll get into the chart. Okay, now that I cleaned this up, I took the moving averages out because we pretty much know it's trending higher highs and higher lows. So I'll start out here. So as of right now, we're 1 year and change going into 2 years. It's going to be interesting. A lot of Gann's theory. So there could be a possible change in trend approaching. So that's something on the back of my mind that, maybe the cycles could, in conjunction, confirm one of Gann's theory. So this is a possibility here. Let's see what else I have. We have a 10-year cycle from this swing. Now it's you can say a cycle. In change, because it's not exactly, you see the 10 years, 790, and we're right there now. There could be a possible change coming. From right here to this high to here, we're already at 7 years and change. So that's interesting right there too. That's normally where you would see, Gann's number 7 and numerology and gematria, and I mean, for the ones that know Gann stuff, you know what that means. The number 7, Saturn, and 7 times 7 and all that. So that's interesting right there. And every time I always see that on the media markets, CNBC, Bloomberg, we're at a 7-year high. When I see that number 7, I was like, whoa, wait a minute. That's going to be interesting. And then we have, right here from this swing low to this high, that's 6 years. It's not 7. And it's not one of Gann's number. But, one more year, we're going to go into 7. And we're already hitting 7. We're already hitting 10 from this high. And we're entering about, 2 using Gann's theory. I'll take some of these out because it could get confusing here. We'll go to the big picture ones here. So from this high to down to this flash crash, you can see this line right here. That was the 0. You already know I'm even below it. I've never seen that in my life, so glad to be alive to even see that could happen. That was 11 years and change, not one of Gann's number. You can see from this high to this here was and change, not exactly 10 years, but 10 years. Then you had this. So when I say, from here to here, this is kind of what I could expect or looking for. That, just, putting trend lines and just kind of seeing that there could be a probability where this could kind of play out and you get this downside once you hit these 10-year cycles. And this one is very important because this is from the all-time high. So this has more priority as I look at it. When you're calculating from this high compared to maybe from like here, it's like, all right, maybe, there's like a bunch of highs here. There's a cluster. It's not really important, but if this was just one big high and it was just here and then it goes all down, then this I consider as important. But it's not up on the scale as, priority or, important. But it's still there because it's a time frame that, Gann discovered and used and shared with his students. We'll continue from up the all-time high down here. This is interesting because this is why I call it as an inverse. Normally the 7 will be a downward cycle, and this just got inverted from the all-time high to here. We just popped, and then you see that there's like a cluster with the 7 years. So you got a 7 year from the top to the bottom, and then from this crash to this low crash for 7 years and change. This is a little more closer to the 7 year. But when you know these numbers, you're like, yeah, you know what? This might be a great time to be buying. And you just got to wait for your other indicators or whatever you use to get in, trend line, moving averages, whatever, and then just get in and then just see what happens. There's from this swing low to this high was like 2 and change years. You can see the 2 years and change, things change, and that's kind of what I'm assuming could happen here. We're already at 1 year and change, and once we enter that, that second year, this could kind of work out here. Let's see what else we have. And you have this down, which was 1 year and change. You take this 10 out of here, because I'm going to show you. So this was like the important one, because this was like the highest one. Everyone's were a little lower highs, and then it just crashed. So this one, from this high to this high, you have 7 years and change. So you see, Gann would say is like, yeah, watch out for 7 years. When you're starting out using Gann stuff, you're like, oh yeah, 7 years exactly. It's going to just crash. It's going to turn on the dot. It's not like that. It's and change and just fluctuates, extends a little more. It takes a little more time for it to turn, but the numbers you want to see is that 7, 7, 7 for possible turning points. And it's just not one number. There's 10, there's 15, there's 20, big picture stuff. And then from this high to this swing point was 5 years. And that's one of Gann's number, the 5 year. You can see that. So when you get a cluster, you get the 7, the 5, and you'll be like, you know what? And you're like here, and you're calculating this, and you're like, all right, we're in the 7, and we're from right here, we're in, in 4, and then, actually 5, because it was 5 and change. So you're here in the 7, going up, and you're trending, and you put your trend line going up like that. And I was like, all right, I'm just going to wait for at least if it breaks that trend line, because these numbers, one of Gann's numbers and cycles, I'm looking for a change in trend. And when you get that, it's massive, even though it popped up. So this is what I'm just teaching you, that these numbers are important. And I think that's it. So let's get all this out. And we're going to go into our Gann Square and see what the Gann Square is telling us. Okay, on the Gann Square, What you want to do is you want to square the range. And there's a lot of ways to do it. I've done a lot of videos on it, different ways, different softwares. Lately, I've been using more this program. What you do, you take the all-time high, you take the all-time low. I feel like this is very important. You could probably get it from here to here, but I feel like getting it from the all-time high to this massive all-time low below below zero is going to be significant going forward on into the future. What you do is you extend it, and now you see that you have a key angle coming down, and we want to see once crude oil, gets into it, if we're gonna have resistance there. We haven't yet. Then you want to add the 1/4 overlay, and you can see that somewhere around here, 100 and something is gonna be resistance right there. I don't know why it's not showing my price level, but somewhere around 105, which kind of lines up with the 104 market the market profile value area high. That kind of lines up in the other chart I showed you with a simple glance. So that one is going to be strong resistance, and you can see, and I mean, it's just kind of interesting after the fact that we put that here, that 1/4 is right there. So that's one key level you want to, find. If we could get up there, that's going to be the first target, 104, 105. Then you put the 1/8. You can see that we already blew right through 85. And we're probably hovering around 90, 93 right here. Nothing really there. And then you add the 1/6. And this is where we at right now, at maybe 93 with the 1/6 overlay lines. So the important one will be the 1/4 first, which is this one. Then second is the 1/8, and then the third is the 1/6. And right now we're at resistance and an angle coming down. If we get to blow through that angle, then make it easy. 1/4 is going to be your target. If a war breaks out, an invasion, something happens, that's going to be a target of resistance that maybe could be a possible top as of right now. If not, then the next target from there, using the 1/6, will be somewhere around 120, which will be a lot of people were saying in the news. And then you got the 1/8, which is around 130, you could say 35 around there. And then obviously the all-time high is like 145, something around there and change. So those are the key levels. As you can see, a lot of this stuff kind of lines up with, the market profile, a lot of key levels I was telling you to keep an eye on. But those are the resistance levels, if we keep chucking along, that you want to keep an eye on.